Good evening, everybody. Welcome to our YouTube channel, Fast CPA and Consultants. I'd like to introduce our CPA, Fulton Abraham Sanchez. Welcome back, Fulton.
Thank you, Sarah.
If you're visiting us for the first time, we introduced a few months ago this year's Tax Talks, where you send us your questions through email, social media, and today's topic we have accounting for real estate. So are we ready to begin?
Yes.
Amazing. So first question we have, does accounting help with real estate investing?
Definitely. The benefit of accounting is the organization of all transactions that any operation is, in this case, specifically real estate, will have during the fiscal year. So income, the income received for the rentals, and the expenses, different categories of expenses like taxes paid, utilities, rehab or repairs, maintenance, vendor, anything that the property needs in terms of plumbing, electricity, all that needs to be summarized and provide a report at the end of the year. This is possible with accounting. And also it will give the owner the ability to know what is the profits of the company at the end of the year. This is the real benefit of the accounting, that I can have monthly or yearly a clear picture, and a clean picture of the transactions summarized for the activity of real estate every year.
Okay, got it. And second question, how do accountants manage real estate investment?
It all depends of the type of activity. There is residential and also there is commercial. Residential is when there is 1 unit, 2 units, 3 units. It's very straightforward. There is one property that is linked sometimes to one single bank account. When there are multiple properties, it is advisable to have one bank account per property. So I know what income and what expenses go for each property. If that is a little too much, because there is a lot of transactions, a lot of entries in different transactions or in different accounts, then we can have one single account for all the properties. And then is when the accounting really comes in. For residentials, it will be straightforward. Income and expenses for one property, for two properties. In the case of commercial, it varies a little because then the nature of the expenses is different. For example, just to give you an idea, in commercial, there is the real estate taxes that are paid every year are distributed to the tenants. To each of the tenants, it is distributed according to the square footage of the property. So let's say by November, when all taxes, real estate taxes are paid, there is a bill, an additional bill, different from the bill of rental of rent, that the owner of the property should send to the different tenants to pay these taxes, this real estate tax. This is the big difference between real estate, between rental for commercial and rental for residential. Also, residential do not pay sales tax. When the owner of a property rents to a person, there is no sales tax. For commercial, at least many states like Florida, they tax real estate for commercial. So there is a sales tax, additional sales tax that is payable or is collectible every month. This is how we handle the accounting for real estate. This is what we check when we take residential clients or commercial clients. This is what we review whenever the property is coming to for our administration. If the reporting of the income tax at the end of the year. If there are all these additional income and additional measures that each of the properties, in this case commercial properties, need to assess to the tenants for each property. Then at the end of the year, we do the accounting. We take the bank statements for each of the properties, for each of the accounts, and we produce the financial statement classifying the income and the expenses accordingly, and then producing a report that could be a profit and loss, and also the balance sheet if that is required. Usually, yes, it is required, but this is how we handle the real estate investments. Um, when we are doing both the accounting and the taxes, we are very careful with the depreciation. Depreciation is a big expense or a big deduction, it's also called a tax shelter, that the owners of the real estate enjoy to reduce their profits. So usually is if the property will be held for a number of years, it's advisable to take the depreciation for reducing the expenses at the end of the year. Now, remember, depreciation is not it's something that the owner of the property needs to pay back. When the property is it's sold, the depreciation is recaptured. It means that it will be added back to the price to the sales price, and the profit, in this case, the capital gain will increase, and the capital gain taxes will be higher. The good thing is that there is a preferential rate for capital gains tax that is going between up to 20%.
Got it. Our third question is, what is real estate bookkeeping?
Bookkeeping is only the doing of the books. It means that the only objective of bookkeeping, different to accounting, bookkeeping is the only doing of the books. I keep the books monthly or yearly with the objective of classifying the transactions. And then at the end of the year, the bookkeeping can be done by a bookkeeper, and then the accountant is the one doing the accounting and doing the closing entries and producing the financial statements. That's a basic difference. Bookkeeping is just keeping the books month to month or year to year with the objective of classifying the transactions.
Got it, understood. What is property accounting?
Property accounting is the classification of all transactions coming from real estate, income and expenses for a property. There is, for example, retail accounting. That is when someone has a store, and the accounting is for the store, that is retail. In this case, property accounting is the accounting of the property, the accounting of the transactions of the property. So it's the accounting exclusively designed for the property, for the classification of the transactions of the property that is purchased.
Got it. And our last question is, what is the benefits of accounting for real estate investments?
One of the main benefits is the correct classification of the expenses. And when there is when classification is correctly stated, there are no missing, or there will be no missing expenses. Meaning the property owner will enjoy all the expenses classified during the year, and those expenses classified will be taken for the creation of the tax return. And all the expenses that were incurred in the property will be included into the tax return, reducing the profits of the company. So one benefit. Second, the correct calculation of the depreciation. We've seen a few times in returns that come from other accountants that depreciation is either not present or is miscalculated. Many times depreciation is calculated following the accelerated depreciation, and in principle this is not complete, that is not completely correct. But the IRS requires that the depreciation is depreciated, I'm sorry, the property is depreciated in a straight line, meaning in an equal amount for every year. 20.27 years, 27.5 years for residential, 39 years for commercial. But problem with misclassification of depreciation is that if I do an accelerated depreciation instead of straight line, it means that when I sell the property, I will pay more taxes because I have taken more depreciation in the first years when I purchased the property. And remember that when I depreciate, I have to retake the depreciation, and something that's called the recapture of depreciation. So it's better not to take accelerated depreciation, but take the straight line depreciation. That means that I have to take the equal amounts every year as the IRS requires. So those are the basics of or the benefits of doing real estate accounting for a determined number of properties.
Understood. So that was our last question for today. Thank you, Fulton, for your time and the information. If you have any more questions, you can write us to our email or social media. We do have an exclusive private group on Facebook. We'll put the link down below, and we'll see you on the next video.
Pleasure. Thank you.